Welcome to Integrated Planning, where we take an integrated approach to growing and protecting your wealth. My name is Jeff Dick, and today we're going to talk about critical illness insurance. 1 in 3 Canadians will have some form of cancer during their lifetimes. 1 in 4 Canadians will suffer heart disease. 50,000 Canadians a year will have a stroke. Those are some of the statistics that we find that created the need for a new form of insurance that we refer to as critical illness insurance. Critical illness insurance is a type of insurance that's designed to provide families or individuals with a lump sum of capital in the event they are diagnosed with one of the covered conditions under that insurance contract. Quite frankly, with many of the insurance carriers, the remaining covered conditions are window dressing. Very little claims come from the remaining 23 conditions. However, they are there to provide coverage for the outliers when they do have some type of condition that requires them to either miss work or become critically ill. As opposed to disability insurance, as we've mentioned in a different video, disability insurance covers your income. It provides a regular stream of income replacement every month until you have recovered from that disability or from that illness. Critical illness is different in that it provides a lump sum payment, just one lump sum, a tax-free amount in the amount of insurance that you've acquired, and that lump sum is payable once you've been diagnosed with a covered condition and have survived what's referred to as a 30-day waiting period. So, grand scheme of things, if you're still alive at the end of that 30-day waiting period, the benefit is paid out. That benefit you now have access to for whatever you'd wish. Many people use it to modify their home if they're going to be dealing with a lifelong illness. Others use it to access care outside of our country. So skipping the line, as it were, perhaps heading down to the Mayo or to the Cleveland Clinic to access care that may be otherwise unavailable in Canada. Others still, in the event of terminal illness, may simply want to spend the time with their family and take them on a vacation of a lifetime. The nice part about critical illness is that there's no requirement for what you use the funds for. You can choose and use those funds however you wish. Similar to what we've talked about with disability insurance, critical illness insurance is insurance that's designed for you. It's designed for you while you're alive. Life insurance, again, is designed really for somebody else or for your family or for your estate, charities, whatever it might be. But it requires you being underground, not above ground. Critical illness is designed for you while you're alive, so in the event that you are diagnosed with a condition, you are covered and you are provided a lump sum of cash. When we look at those stats again, and we can take a look at individual situations, if I had 2 other people in this room with me, 1 out of 3 of us would be diagnosed with cancer during our lifetimes. And those statistics really get driven home when you start to deal with that on a personal level. Critical illness insurance can be purchased a number of different ways. You can buy it for your lifetime. You can buy it on a temporary basis. You can add riders, as they're called, onto the policy that would allow you to either surrender the insurance contract and take back all your premium after the 15th year, or worse, if you were to pass away at any point during the contract, all of the premiums would be returned to your estate. So the additional features that are associated with these types of contracts will ensure that you can continue to make decisions along the way as to what that coverage looks like. Whether it's canceling and getting your money back, or perhaps it is unfortunately passing away prior to the claim being paid out, but your estate receiving all the dollars that have been paid into the insurance premium up to that point. You may be curious as to how much critical illness insurance you can purchase. Benefits start at $25,000 and they cap out at about $3 million today. That amount was lower 5 years ago. It'll likely be higher 5 years from now. However, the maximum amount that you can get today in Canada is $3 million. Pricing can be reasonable to very expensive, and that really all depends on the individual situation. However, we do know the incidence of claim, which drive pricing methodology, are increasing as our demographics age. Critical illness insurance forms a vital part of your integrated financial plan. 1 in 3 of us will be diagnosed with cancer. 1 in 4 of us will suffer some form of heart disease. 50,000 of us each year in Canada are diagnosed with stroke. So it is a vitally important coverage. Working with your integrated advisor ensures that everything's prioritized and that your needs are met. If you like this video, please subscribe to our channel. If you'd like more information on critical illness insurance, please contact your integrated advisor or your CPA for more information.